Hey everybody, Jim Malone here from Dallas Trading Floor. Well, you may have missed NVDA. NVDA has just been a rocket ship, moving up very, very nicely after its 505 breakout. But I have kind of another idea here, and this stock has been doing great. It's called ARM Holdings. Well, why am I so bullish on ARM Holdings? Well, one of the things about ARM Holdings is that it is very, very similar to NVIDIA in terms of the clientele that it goes after, and that's data centers. And there's been a huge amount of data center development going on. One of the things about ARM is that they have the ARM chip, which is the primary chip that's used in data centers worldwide. It's also used in a lot of the Android phones as well, and it is doing extremely well. The interesting thing about this chip designer is that it's a long-term partner of the Magnificent Seven companies like NVIDIA, Apple, and of course Microsoft and Meta. So very, very strong. Another thing about this is that it has a 99 composite rating and the EPS is rising. That means the earnings per share are going up. So it's looking very, very strong, and the relative strength against everything else has improved very significantly. When I get into stocks, obviously, I like to get them on before they make their bounce. But here's what's happened with ARM. I've been trading it for several weeks. I didn't quite get the gap up, but I did get it right as it pulled back and formed this very nice movement up here. I do think that we're going to go higher. As you can see, after earnings, it gapped up, and then it gapped all the way up here to about 162 and then pulled back. A real safe way of playing this is with a covered call option. That gives us some protection to the downside. Here's what I propose. This is basically a 5-day trade. The way it works is on Monday we come in and we purchase 100 shares of ARM, and I'm anticipating that price will be about 141.56, and then we immediately go out and we write a call. And the call I'm going to write is a 145 call for $5.18. This is my estimate of how much this call will bring. Now, the interesting thing about this, of course, is if it does not go above 145, we're going to keep all of the premium. We're going to keep the $518. But if it goes above that, we cover our situation, our position with the shares that we purchased. Here's the payout chart. The potential of this trade in 1 week is about $862. And the way that I calculated that, of course, is if it moves all the way up, we have an event where we are taken out. We are exercised. The call option is exercised. Then, with the increase in the value from where we bought it at about 141 up to the 145 price. Well, adding that to the price of the call, that's going to give us about an $829 potential gain. Now, there's a probability of profit on this one. That means it's positive. That means it moves of about 63%, I'm calculating on this one. And our break even on this one is 136.38. So very good return, about 6.32% return, or about 385% per annum. So very, very strong on that return. So this is just how I'm playing it. I have 2 positions that I'm doing this in, and I think that it definitely is worthwhile taking a look at this stock, ARM, the symbol ARM.